Brooke here from Remax Niagara and the Niagara Sold by Kate team, and we're here with our second episode of our First Time Homebuyers series.
Today we're going to sit down with Jason Howe from Dominion Lending Centers to talk about everything you need to know about being approved for financing to purchase your first home. So what is your role in the home buying process and when do you typically get involved?
My role is to facilitate the financing for first-time home buyers. Typically, I get involved sometimes before clients meet with realtors, sometimes after. It could be a referral from a realtor to me. It could be a personal friend. It could be a referral from other clients. And my role is to assess if what they can afford to purchase as a house.
So how far in advance should we come to you to get pre-qualified?
As soon as you have a client that's looking to buy a house, you want to know what their affordability is. So the sooner you can get them in front of a financial specialist or a mortgage specialist, mortgage broker, then we can assess where they are financially and how much they can approve.
So what is the difference between pre-qualified and pre-approved?
The difference between pre-qualified and pre-approved. Pre-qualified is your clients coming in seeing me. I'm going through all the documentation and recommending based on my experience, this is how much, and my programs, how much you can afford based on everything you've given me. Pre-approved, most lenders don't even offer a full pre-approval anymore, as the insurance companies, CMHC, Genworth, they do not look at pre-approvals anymore. So we're all basically going based on our own experience. The only actual pre-approvals that I can get is if it's over 20% down. I can go to a couple of local credit unions and they will actually fully underwrite the deals ahead of time. So then I can come back and say, you are pre-approved based on all your info that you've given me, that I've given this lender. And they will say, yes, you are now pre-approved for X amount of dollars.
And what kind of documentation do you need to find out where someone is approved for?
Typically, we would look for a job letter, pay stubs, and depending on the industry they're in, we might need notice of assessments, T4s, bank statements, depending on where down payment is coming from. In a nutshell, that's about what we're looking for.
And then once they know how much they're approved for, they've gotten a pre-approval letter from you, they go out shopping with a realtor, and they decide on the house of their dreams. How much time do you need to say this is possible with your finances?
Typically, depending on the market, I would normally ask for 5 business days. Depending on the lender, we may be able to get it shortened. I'd say 2 to 3 would be fast, because lenders don't look at the documentation that you've provided to me up front. So it's me looking at your documentation, seeing where you're at based on my experience. This is what I see. I submit an application. You have your conditional approval. We go in, they review the documents, and then from there they give me it's called a broker complete.
And what do lenders look for in a successful candidate?
Typically across the board, they're looking for credit, good credit, down payment, where it's coming from, is it saved? They're also looking at your debt load, how much debt you're carrying.
Okay, and say someone doesn't have the best credit score, how could they improve their credit score?
Try not to carry a balance over 80% of the limit of any revolving debt. So that would be credit cards, lines of credit, anything like that. Even if you're making your minimum payment every month, if you're still carrying a high balance, it's actually hurting your credit score. Other than that, if funds are tight, make sure you're at least making the minimum payment every month.
And then what if someone doesn't have any credit? What are some good ways that they can maybe start building it or kind of learning to take those steps?
One good thing is a secured credit card. You would have to go to your bank and just put down $500, and what it is a preloaded credit card for you, but you're actually starting to build credit. Another way is try and buy a credit card or get a credit card, and use it every day. Use it to buy a bag of milk, buy your gas, go home, pay it off, and you'll immediately start building credit from there.
Great. You mentioned a down payment. So what does a first-time buyer need for a down payment, and what are their options for that? Is it allowed to be gifted? Can they use savings? How does that work?
Typically, by Canadian government law, we have to have 5% down. There are a number of different options available. If you don't have a down payment, you're able to borrow off a credit line if you want. I just have to add that debt back into your debt ratios to make sure you qualify properly. You're allowed to borrow off your RSPs without taking a tax hit as a first-time home buyer. I do have a local credit union in the Niagara region that does 5% cash back, essentially making it a no down payment. As far as you can also get gifted down payment from your parents. So as long as there's no repayment needed, you can borrow that, or not borrow, you get gifted down payment from your parents.
Are there any timeline restrictions with things like that? I know with RRSPs, we have to have a little bit of a waiting period. So can you go into detail on that a little bit?
Yes. So typically they have to be in for 90 days before you can withdraw them, tax-free. As far as the other ones, the gifted down payment, there's no restriction. We usually get a gift letter and then we show the deposit from your parents. The cash back with the lender is done at the lawyer's office, so you don't have to come up with the money up front besides your deposit that you put on offer.
Are you aware of any grants in Niagara that can help first-time home buyers with down payment assistance?
Yes, the Niagara Region Housing Assistance Program is out there for first-time home buyers. There are a number of criteria you have to meet to qualify. If you qualify, they will actually give you 5% down towards the down payment of your property. Some of the criteria are you have to have a gross annual household income of 85,900. They do put a lien on your property for 20 years. If you sell the house after 20 years or before 20 years, you actually have to pay that down payment plus interest back, and it is all calculated out beforehand. And there is a maximum purchase price of $468,000 to qualify.
So you're a mortgage broker. Some people aren't aware that there's other options outside of a bank to get a mortgage. So can you tell us a little bit about what the difference is going through a mortgage broker or going through your bank?
Yes. So myself, I work for Dominion Lending. I have access to 50 plus different lenders that I deal with. When somebody deals with their bank, they're stuck with what the bank is offering, what rate they're offering. And if they want to shop around, they have to take a credit hit everywhere they go. Whereas I take one credit hit and I shop around for your clients. Typically, I'm finding better rates than what your bank's going to offer, and it's the exact same mortgage that you're going to get from your bank. Sometimes there are fees involved, and the client is well aware before even moving forward what the fees are, but typically there are no fees. It's usually free to use me across the board.
So are the rates the same going through a mortgage broker as they are with your financial institution?
Yes. Typically, the broker side can find cheaper rates than what your bank can offer.
What's the difference between an A and B lender?
An A lender is your big banks, credit unions. We do have a lot of mortgage companies that are in the A side as well. Those are for your strong clientele. So they're everyone that would qualify to bank, they'll qualify within the A lending area. B lending, they're a little more flexible on what they're allowed to do compared to the A lending. Typically, you need at least 20 to 25% down if you're going to go the B lending. B lending, there are fees involved as well. Typically, it's roughly 2% of the mortgage. That would cover your broker fee and a lender fee. Private as well. Private money is more based on just the equity in the home. So it's an individual investor willing to lend you money at X amount interest rate plus fees that are involved. Again, everything's disclosed up front for the clientele. The A lender, you do not pay the broker. You pay the broker nothing. Once we go into B and private lending, there are fees involved, and they're disclosed even before moving forward at the exact amounts.
And when someone comes to a mortgage broker, they get to look at all of those options up front, or do you go A first, then B, then private?
I do go A first. Always try and qualify a client with A lending as fast as possible. B lending, if the client can fall into B lending, they're typically smaller terms. They're usually a 1 or 2 year term, and then we try and flip them back to the A lender. And private's a totally separate thing. It's based on equity, and when we can flip them back to either a B or an A, we do that as well.
So I know that for a lot of first-time home buyers, it can be kind of stressful choosing who to work with and like where to go. So what questions should they ask when deciding which lender to work with?
So yes, some lenders will offer a super low rate, but you're getting none of the perks of a normal mortgage. So you can't prepay your mortgage. It might be straight payments. If you do prepay any of the extra mortgage, you get charged a high interest rate. It could be whatever the balance. Typically it's 3% of the balance owing is what you're going to have to pay as a penalty, and that's pretty hefty when you're getting into the higher mortgage amounts. They should find out what can we put down annually extra. What are the rates? What are the perks that come with it? Those are your typical questions you should ask the lenders. It's not always just about rate.
Do different mortgage brokers have access to different lending partners? You mentioned that you work with 50 different. Is that a perk? Like, is that something that people should ask? How many different funds, resources, I guess, they have access to for funds?
Yes. Depending on what brokerage you're with, some people have access to different lenders, different A lenders, B lenders, private lenders. It all depends on what that client's needs are. But yes, they should ask how many lenders you're dealing with, and what's it cost me to do that?
And what is the benefit of a prepayment?
Using a prepayment, any of the ways they offer it, either increasing your monthly payments or doing a lump sum payment, those payments that you increase go straight to principal. So you're not paying any interest on them, and that's the fastest way to pay down your mortgage. Just take advantage of all those.
And what do you think something that first-time home buyers are really surprised with when they start the process, or something that they had no idea was going to happen?
For the most part, people coming in are surprised that I'm able to beat the bank's rate. That's the number one thing. They come in, they can't believe the difference between what rate I got them and what the bank's offering, and it's the exact same mortgage, exact same, structured the exact same way, same perks, same prepayment privileges. And we're saving them thousands up front because mortgages are front loaded with interest.
So what does it cost to use a mortgage broker?
It costs the client nothing up front. It's our first meeting, then we qualify you based on where you're at and where you fall into which lending category. And that from there, if there are fees involved, they will be disclosed up front, and you'll know ahead of time exactly how much it is. But if you're on the A side of lending with the big banks and mortgage companies, it absolutely costs you nothing to use us.
So Jason, thank you so much for sitting down with us and answering all of our questions and sharing all your experience and knowledge with our first-time buyers. If you had one piece of advice to give to first-time buyers, what would it be?
Trust your professionals. They're here for a reason. Your realtors are there. They're looking out for your best interests. That'd be my biggest piece. Trust your professionals.